Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. Let's look at the Bitcoin trap that is happening right now in the charts. What can we look out for in terms of confirmation of the trap, invalidation of the trap, price levels to look out for on Bitcoin and Ethereum. We're looking at the short-term and macro timeframes here to build a better cryptocurrency portfolio. That sounds like it's up your alley. Smash up the likes, subscribe to the channel if you haven't already, and don't worry, I'll remind you again at the end of the video for those that don't like clicking the buttons at the beginning of the video. All right, first up guys, let's take a look at this Bitcoin pump trap happening at the moment. The price has risen up to 22,350 on most exchanges. We're looking at Coinbase here, as this is where a lot of people trade. There's a lot of volume there. The 50% level, this was a key level for us since the low came in on the 7th of September. Remember, our 50% levels are very important when it comes to showing signs of support and resistance. Now, this is something that is happening at the moment. We're on the 4-hour chart, so there's 40 minutes to go in this particular bar. The trap is if we don't get a close above the 50% level. We need to close above 21,900. So this is also a key level of resistance from when Bitcoin broke down. So this back here in August was talks of the Fed raising interest rates, more fearful news that was happening on the S&P, the market started to break down, and the rest, of course, is history. We're coming back up to test that resistance level. So that's, for me, is why it's such a key level for the market to close above in the short term so that the cogs in our plan can start to work on the bigger term time frames. Short term, hourly, 4-hourly, then we start to work our way into the daily. So we want to see those closes at the end of the day above 21,900. And then of course at the end of the week, which have only just started, we closed the last week quite strong. So let's work our way up to the daily here on Bitcoin. These are our targets, as always, that we've had here for quite some time. The Wyckoff bullish flip for me is above 26,900. So we're going to that more macro picture for Bitcoin. We're not there yet. The shorter term Wyckoff flip, we move that down just for the Wyckoff flip there. This is this bar right here. The market basically broke down structure and the change of behavior came into play. 19th of August, top 23,200. So that's the next level. 50% we've got to overcome. 23,200, of course, got to break through those highs at 25.2, and then the bigger one here, this is my real key level, 26.9. We've got plenty of levels to go after that, of course, tops here, and then the major one, 34.5, but if we can get back to this 26.9, then we can start to put in a bigger, longer term trading range for BTC, and that makes it a more safe zone, at least in my opinion, for a bit more of like a dollar cost averaging play. Dollar cost averaging is fine for me at this point in time, but that's just like that extra confirmation to say that a lot of the bears are now dead. It doesn't mean the bottom is 100% in, but at least it shows that the bears are basically dead because the bears took huge control of the market with that down bar on the 13th. Of course, the market was down a long time before that, but just looking at the signals that the buyers and the sellers were giving us, this bar being extreme in price range, extreme in volume, very low close. You can see the amount of selling pressure that has come into the market on that bar, broke the bottom that was in on the 12th of May. So a lot of negative signals on, well, a lot of down signals on the 13th of June. So if we can get above that, that at least tells me that the bulls are working their way towards crushing a lot of the bears. They're not there yet, and we see a short-term pump trap at the moment. Provided we can close above 21,900, then we can start to say maybe the trap is invalidated. This is something that I've looked at on the channel for the last couple of days in a lot of detail. You know, warning, pump trap, Bitcoin trap, etc., because of this particular thing here. And it's really cool to see it happening in real time. The trap being that we get that quick pump up, market drops back down. That's what it looks like if you're looking at on candles, on bars. You can see the close here on the right hand side if it gets a little bit lower and basically closes beneath there at the end of the day as well. So for the support, should that be a short-term pump trap, support comes in at these previous lows. So you can see the market tried to find support and then broke down on the 26th of August, found a little resistance here on the 30th, and then basically burst back through it a few days ago. I think it was on Friday as well, just getting back above that. So we want to see some support come in at, surprise, surprise, 20,700. and these tops here probably look as low as 20,200, just to give it a bit of leeway in case we see a wick down and then a higher close. What that looks like on the chart is the market basically falling back to this level, maybe a wick down, but then a close above that level there, just to find some more support before retesting the underside and hopefully getting back above. That's basically what I want to see for the bulls to remain in control on that sort of short to medium term time frame, basically looking at the daily chart here, which could then take the next few days to few weeks to finally play out. Working our way back to the weekly now, looking at the Wyckoff accumulation. The lows, we've seen that now. We've got a little bounce in here that happened from Friday. So it's good to see that at least we got a test of the secondary test levels. You can see the lows here, they're at 18.5K. We had the selling climax on June, around the 13th. And potentially we will see lower prices, but that doesn't mean that the entire trading range is invalidated just yet. In terms of the Wyckoff accumulation schematic, it would happen if we got breaks underneath and then closes underneath that level with lower tops and then lower lows. That's basically the invalidation. So for now, we're still within this zone. Hopefully this is the range that we're going to continue to hold out for 2022 and then potentially into 2023 when we can finally find our way to break out and get back above 30K. What does it mean for traders and investors? Well, for traders, you want to see volatility so that you can trade the market. When the market is boring, sideways, dead, not much you can do. But for the majority of us here who are basically trying to DCA into Bitcoin, maybe cryptocurrencies, but looking at Bitcoin, well, that's what I had mentioned previously. I love the level under $20,000. It's based on my cycle buy zones. I do many updates about that on the channel and mention it to our members in Premium and Lite, so the Investor Accelerator members. Links to all that is in the top of the video description. We got a massive monthly mini lesson coming out this week about overbalance in time and price, which is extremely helpful for identifying lows in the market. Now, if you want to join us for the TIA Premium lesson this month, put your name and email address down below, top of the video description. The free email newsletter will email you out the details of how you can join that. The crypto pump traps don't end with Bitcoin. They look like they are hitting us on Ethereum too. It's something that we've been also covering on the channel here, a lot to do with ETH in these last few videos, and obviously over the last few weeks as the market was heading up, it hit smack on our resistance levels just in some simple time frames and also some price areas as well. We got that pullback. And then the biggest thing that I talked about, and this takes many, many weeks, which you've now seen to play out, is that we can see the energy wane from the market, just gets really, really low as much as it tries to come back, like this ETH merge news, and you just don't see that move on in price, comparing price to the previous top. So we'll look at that on the chart. I also want to remind us, a couple of days, 3 days, 2 to 3 days, someone mentioned in the comments, scroll down a bit, here it is down here, 2 days, 20 hours, and then also the difficulty bomb countdown up here. Looking back at Ethereum, March, April, huge things here, March, April. Don't mind the year, I'm in Thailand, this is what year it is here in Thailand. So March and April, this is the news headlines. Remember these things, Mark Cuban, April 6th, very bullish on the upcoming merge. We also had March 31st, how post-merge Ethereum could attract institutional investment. What that looks like on the chart, that was it right there, ETH merge pump trap. And talked about it back then in March. If you guys remember, let me know in the comments section down below. I hope you're starting to see how all of this news is basically just there to trap retail investors. So for me, I don't use the news whatsoever for my long-term investing. It is absolute garbage, and I say that with sincerity that it is garbage. Crypto news channels that just focus on news, crypto news on Twitter, anything like that, it's my firm opinion that it is there to steal your money. It takes attention, it takes your attention away from basically learning more about trading, about charts, maybe about fundamentals of the project themselves. And the news really does wreck a lot of people. ETH merge pump trap, you have to remember back many, many months. This is 6 months ago now. And for a lot of people in crypto, that's just too long ago to remember. Most people sort of come and go, right? But yeah, basically trapped, destroyed. That is a long way down in their portfolios, from $3.5 grand down to $800-900. And now we're seeing the similar sort of thing again. One day, prices will flip. One day, we will go back above $2,500 right here. This is a big flip level for me. But there is a lot of traps and games that are played in between before we get to that point. Of course, I could be wrong, could pump way past 2,500 in the next 2 days, but I think that the odds are against that happening, and that's why I'm betting on it in terms of the market. 1,700 resistance, we can get rid of that just for now. It did just close above 1,700 on the weekly chart, but at the moment we're just creeping a little way back to test the 50%. So this is that short-term 50% level that was at around 1,700. So that's a really good sign for the Gann analysis. And then, ETH bounced off the previous 50% level of 1,455. Another good sign there. The downside, the possibilities here, if we do get this failure, is that we get a lower top form. So you can see that on the weekly chart, and then a breakdown of 14 at the bottom here, 1420. So if you get a lower top form right here, a breakdown of this level, that's a very, very weak signal for ETH. We could pump a little more from here and then the same thing happen, but provided the market remains under 2,000, call it 2,050, then I would say that this is all part of the pump trap leading into the merge news. Long term, don't get me wrong, long term I think ETH has got a long way to go to the upside, but I think there is a pump trap happening at the moment, dailies to weekly charts. That's what I'm seeing here at the moment. The levels up, remember we looked at these, 2,050 bucks. That would be a really good start to invalidate the pump. ETH to get back above that level, close above it, because it would probably get very close to coming into alignment here with breaking the bear market downtrend. So that's a bullish step. Let's flip to the bullish side of things. And then a break above, that's my big one. I want to see 2,550. Call it 2,500 for easy use here, but it's again above this particular May bar where the market broke down all of this support level. So if the market can get above that, if we can then close above that level, you're basically taking out the resistance, which was support. You are back above this May bar, and you're above the downtrend. So there's a lot going for it here. And also staying above the 50% level, the major 50% level. That's a really, really good flipping point for ETH. But for now, that's what it looks like on ETH USD. ETH BTC is also showing some signs of that downside, unfortunately. I don't mean to be the bearer of all the bad news, but I just want to stay safe in the markets and make money from the markets. I don't want to be caught up in the nonsense, the trap noise, all that sort of jargon that happens time and time and time again. You can see the last time that ETH had its pump was March into the May top, call it the April top, and then a May double top. This is ETH BTC, remember. That was it. That's all the market could do before it absolutely capitulated and dumped into that low. We now see ourselves 5 weeks up, 2 weeks down, another 2 weeks up. The weekly close showing some signs here of weakness as it closed below the previous top and closed below the other top over here, and it's closing within the range of these tops. So it's not the strongest overall. This could change, it could flip, but remember, we've looked at this for weeks now. Strong warning at these tops. This could be the rejection point. So not to get sucked into the market. Back from August, there's the previous top, that the merge news was going to be quite strong in the market, but looking at price, it has done nothing. That is just pure facts from the charts. The data says the price has done nothing in terms of ETH versus BTC when you look at it over the last month. In summary, with the Ethereum merge coming up, people are expecting a lot of volatility. I think the majority of that volatility has probably been had. There will be some volatility, but I think the media and the larger social media channels are really trying to pump up the word of volatility because they don't really have much else to play on. Overall, retail has been fleeing the market, but that's what happens at market bottoms. Most of the people leave, they miss the bottom, they get in at the top, they wish they were here at the bottoms, and they ride the market back down. I know you're not one of those people because you're here watching the channel at the moment. Stay in touch with what's going on with this pump trap. Remember those prices that we looked at in the beginning of the video. Quick thanks to the channel sponsors, Bybit and MEXC. They're doing 0% maker fees, both of the trading exchanges for a limited time, and then also 0% on spot trading pairs as well on Bybit. So thousands of dollars of sign up bonuses down below. Check those out. And of course, our TIA Premium monthly lesson is coming up this week. Huge lesson on overbalance in price and time. So go and check that out. Link in the top of the video description for the free email newsletter. Thanks again, guys. Your reminder for liking and subscribing if you haven't already. See you guys at the next video. Until then, peace out.